Good morning, everyone. It is 6 a.m. on the last day of July. Just barely got here on time, so I apologize. I have only barely got my computer up and running right just in time for our analysis here. So let's take a look at how everything is going. And it looks like everything, at least from the SPY, is up quite a bit, which is really interesting because we ended yesterday looking at the earnings, especially of Microsoft, which is way, 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 way down. So something obviously happened overnight in the European and the Asian markets. So we'll take a look at that. So we'll start out with Microsoft. I want to see what happened with Microsoft. And it looks like Asia and Europe, mostly Europe, bought the heck out of it. So we were way down and then significantly down. Actually, we were 40, almost 10% down after Microsoft earnings. And then it looks like the Europeans took that as a sign that it was super cheap and bought it all the way back up. And now we're only down five. We're not even down, just barely over 1%. So Microsoft recovered quite a bit overnight. So this is very good news. People are getting, I guess, enthusiastic and starting to position for a bullish run after the FOMC announcement. And I don't know, it might be premature. So the expectation probably is that we might pop a little bit on the announcement, which really shouldn't be a surprise. So it wouldn't be a big movement because we are at almost 0% chance of a rate cut. And a rate cut wouldn't be, I'm sorry, a holding steady wouldn't be very stimulatory for the markets. So people are really anticipating that Powell is going to say something that is very positive or indicative of a rate cut in September. And I don't know. I don't know if that's going to happen. So if it does, then the market will go higher. But if it doesn't, then the market will go way, 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 way lower than the market would go higher if it does happen. So it's very one-sided. So the risk reward is huge in this case, but right now I wouldn't be positioning for it. What we can count on is that it's going to be quite volatile, especially to see Microsoft recover like that is highly, highly, highly unusual. The pre-market, you see, like yesterday when we were looking at this, it looked like we gapped below the MA 200. So for it to recover all the way back almost to yesterday's low is quite an amazing recovery. So there's a lot of bullishness inside of this market, and we don't want to get caught on the wrong side of it. Even if my feeling is that it's unwarranted, it doesn't mean that the market can't go in that direction. It's been especially in the short term. So markets sometimes do act irrationally. There is an exuberance, and we don't want to be in the business of, oh, it should do this and it's supposed to do this. Well, all that matters is what it actually does do. So we want to follow along. And so the thing that we've been saying all week was, hey, we're not going to be directional unless we break below 540, which we broke below 540 but it didn't sustain yesterday, or if we break above 520. And looks like we're opening right at that EMA 20 today, and we'll see if we have enough juice to break above the 550. Did I say the wrong level earlier? Probably. If we break above 550 and stay up there by the end of the close, then we start to be interested in the upside. And then we would maybe wait for confirmation. The smarter thing to do would be wait for confirmation to make sure that we stay above that 550 level. So we'd want a confirmation bar. So let's take a look at our futures and just see just how optimistic everything is. And it's up quite a bit. 1.3% on the S&P, over 2% on the Nasdaq, and almost flat on the Dow. That's really so. The money really came into tech, which is interesting because that's what bled off yesterday, and that's what um, the earnings were not great on tech. So it's interesting that money is really surging into tech right now because the Dow is really it's random. It's up only a random amount. It's only about quarter of a percentage point, and the Nasdaq is up over 2%. It's like 2.2%, 2.15%. So that is a huge discrepancy. Money is really coming into Nasdaq. Let's take a look at what QQQ looks like in the pre-market. Okay, pop up to the EMA 8. So this is sort of danger zone. We 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 remember what we were talking about yesterday, especially with the XLK and the SMH. We had these gap downs or surge down, then we would recover into the EMA 8, surge down, recover into the EMA 8, surge down, and then the very next day recover into EMA 8. Well, if we can carry the momentum forward, then we'll break that pattern. But if we don't, then what we can expect next is a surge downward, and we'll see if this support holds. The QQQ was stronger than XLK and SMH because we didn't break through this green support area, and we didn't really make a lower. We did make a lower low, but just barely, and we ended basically the same level as this. So it was flat across these 4 days, whereas in XLK, you can see that it came significantly lower, but we are recovering right back, not quite to the EMA 8, although today that's a pretty sharp moving EMA 8. Maybe we are recovering into the EMA 8. And then on SMH, same thing. So recover into the EMA 8, sharp movement downwards, and then we pop back right back up into the EMA 8. That is very, very unusual behavior. And so it's going to be hard to evaluate what happens next. But what we do know is that if this doesn't sustain, then we can expect a downward movement and it could get kind of ugly. So a lot is going to hinge on the rate decision today, or more specifically, the conference after the rate decision today. So there's probably going to be some nice day trading opportunities before then because of these extreme moves that are happening right now. But you got to be out before 11 o'clock Pacific. I would say even before 10:30 Pacific, because that the market is going to go quiet heading into the rate cuts, and your liquidity will go low. The spreads will widen out, and then you're going to have trouble. You're going to any profits that you might have had will get erased by the illiquidity. So I would be out. To be safe, I'd be out by 10 o'clock if you're going to day trade, and then just wait and see what happens with that FOMC. Because this one in particular does have the potential to just send markets moving in either the upside or the downside. Just really depends what Powell says. We're going to watch the TLT very carefully. It's popping up near this purple line, critical point. So if the market really likes what Powell is saying, then it'll pop above that. If not, it'll trade back down. So as we're watching the rate cut decision and the FOMC decision, I'd be taking a very careful look at TLT, and I would be looking at the VIX as well. If we spike up or if we pull downward, if the market starts to trade upwards, but we don't see the VIX come down below 15, then that's a divergence. I wouldn't trust that movement. So we really want to watch volatility. So I would be doing a setup. I don't know what I'll call it, FOMC. And I'd be watching intraday. So on either a 1 minute or 5 minute basis. I'll just do 1 minute. And I divide it into 4. and I'd be looking at the VIX, the TLT, the SPY, and the QQQ. All right. So this is exactly how I'd be looking at it. And I wouldn't put any fancy moving averages or anything like that. I don't really care. What we really care is about the directionality. I might throw on a VWAP, but that's about it. And those are the things that we want to watch very, very carefully, especially during the conference. But even today, all day today, if we start to get super directional, like this morning in the futures market, we're already super, super directional. So this is a good idea to keep open and watch throughout the entire day if you're going to be watching during the day. Otherwise, if you're in an all cash position, why does it matter? You don't really care. You might care during the FOMC decision if you're curious, or you could just wait till it close and just see what the reaction was and then start positioning yourself for the morning. So either way, how you want to do it, if you happen not to be in a very neutral portfolio or an all cash portfolio, then you might care and you might want to watch. But if you are neutralized, then take your pick. Just either watch afterwards or you can watch during. But I wouldn't sit around staring at this all morning if your portfolios are neutral. All right, let's take a look at the sectors are tough because we don't necessarily get good pre-market data in the sectors, or the sector ETFs. Let's see. Let's take a look at, really do want to see the sectors though. Let's see if we can we'll just go through them. XLE, pre-market up a little bit, not huge. XLF, same thing, but approaching critical levels, so we could break out. This market is ready for movement, for sure. And it is poised as if it is ready to move upwards. But if there's a shock and we don't get the news that we're expecting, then it could definitely tumble in the opposite direction. So I would be very surprised if we just chop sideways through the FOMC announcement and the conference. And I'm pretty sure we are going to move in one direction or the other. So straddle, strangle might have been a good idea if you were able to get it at a low enough cost. The market makers would widen out their spreads anyway. So in order to not lose money if we get a run. And if I'm anticipating a run, then they're probably anticipating a run as well. So a straddle or strangle would have to really move quite a bit in order for you to make money, unless you put it on earlier, like maybe last week, or if you were able to reduce costs by doing a double calendar or something like that. So XLE and F both popping up and hitting a critical point. F more so than E. Let's look at XLI. Yeah, big bounce near the highs. Same thing. Boys looks very much like XLF. XLB, same thing. Okay, XLC, nice little pop up. Looks like the makings of a confirmation bar, as long as it can stay up, like we get a green bar. But of course, we have this line. We drew this line for a reason. That's the real confirmation that we want. We want to break above there, just like SMH. We don't want to get too excited until we reach this 265 level, or at 266 for some reason. 265. So this pre-market is straight up into the EMA 8. So that this one has a large amount to go before we will allow ourselves to be bullish on it. And then we've got, did we do XLK already? Yeah, same thing for XLK. We already looked at XLK. XLY. XLY popping up above the EMA 20 at the pre-market. So if it can sustain itself upwards, but we're going to give ourselves the same criteria that we have for all those tech sectors. We want to pop above this 191 level before we allow ourselves to get bullish on XLY. And then let's take a look at XLP. Staples not moving at all. So that's what we were looking at. The Dow Jones not really moving at all. And then NASDAQ up huge. So let's look at XLP, XLV. Yeah, same thing. All these safer sectors not moving, even real estate not moving that much. And then I'm missing one, I think. Which one am I missing? Retail, but oh, utilities. I'm missing utilities. Okay. Yeah, utilities popping up, also hitting a resistance right at the open. So if we can break out, a lot of these sectors really, really would move. And we just got to be very careful with volatility, especially in the tech sectors and consumer discretionary. Yeah, retail is not moving that much, which is interesting because discretionary moved quite a bit. So we just want to be super careful with and watch this carefully if we're day trading. I'll watch it carefully during the FOMC minutes if we want to see what the market is doing during that time, or we can just take a snapshot of it at the market close, just so we know how everything developed into the point where we closed, and then we can evaluate things after markets to see how we want to reposition ourselves. Remember, we still have the employment situation on Friday, so that's going to be a important data point as well, an important report as well. So it's not all the FOMC, but right now, the way that the market is poised, the FOMC conference is going to be a very large determining factor. At least in the short term, it's going to send us either up or down. I'd be, again, very surprised if it didn't. So the employment situation after that, it might just be carrying momentum from the rate decision, because the employment decision is always an important report. It helps portfolio managers allocate, but it is going to be watched even more closely because the FOMC is going to be looking at it as well. So if we already have a decision, or if we have a very good idea of what the Fed is going to do on the next rate cut in September, then the employment situation will have less impact. But if Powell is just super vague and just says, we need more data and we're not sure, we need the data to come in, then the employment situation will become more important. But of course, if he says that, then all the people who are anticipating a rate cut in September at basically 100% of people priced in, then that's going to be a big disappointment. And so we'll move down anyways. So I can't think of a scenario where we would just chop sideways. Yeah, so I'd be surprised, or I'll learn something. I'll learn what could actually make the market chop sideways. If Powell says something amazing that I can't anticipate, that would send the markets sideways. So it'll be either a very good learning experience for me, or we'll move quite a bit today. I think that's all we can look at. We just are preparing ourselves for the FOMC that's going to overshadow anything else that's going on. Where our earnings that came and went are already, sorry. We should also look at what earnings are coming out today after market and tomorrow before market. We have Meta. So this Meta could undo or support whatever the FOMC is. But what we saw already was that Microsoft, what happened, that based off of its own earnings, is way down below that MA200, but we recovered over here in anticipation of the FOMC. Meta won't really have the same benefit because the FOMC will already have passed, but it could ride a wave of the FOMC, meaning that even if it has terrible earnings or has a negative earnings surprise, it may not get impacted as much like Microsoft got impacted all the way down to its MA200. If Meta puts out similar news, it may not go down that much. It might not go all the way to below its MA200. It may just gap down a baby tiny amount if we have a lot of enthusiasm after the FOMC conference. So it might just benefit. And if that's the case, then its effect to the downside would be muted or in the direction of whatever we anticipate, in the opposite direction of whatever the FOMC effect is, that would be dampened. Okay. And then tomorrow before market, nothing huge. Some energy stocks, some consumer staples. That's about it. Let's see what happened today before market, because there must have been nothing huge. Boeing, MasterCard, T-Mobile, HSBC. Boeing, nothing huge. MasterCard went up quite a bit, actually before earnings. Well, I don't know how accurate this thing is. So it went up quite a bit, but it wouldn't have undone Microsoft. And actually, Microsoft recovered in this blue region. It recovered in Europe, not the yellow region. So obviously did not have an effect on Microsoft. And then T-Mobile, same thing. And what was the last one? HSBC. I can't imagine it doing anything to affect the markets. Yeah, there you go. Okay. So we just saw a lot of enthusiasm for that Microsoft, and the Europeans just bought the heck out of it. Obviously, they thought it was a bargain. So we'll watch very carefully this screen right here throughout the day if we're day trading or during the FOMC minutes, or at the very least, we'll be looking at this in the aftermarket analysis. All right, that's it for this morning. Have a wonderful rest of your morning. I would, since you guys are probably mostly in cash or neutral, I would just not even bother. Do something else interesting to you with your time, and then come back and see what happens after market. Have a wonderful rest of your day, and I'll see you at 1 o'clock.